In this video, I'll take you through the concept of company's power to borrow. This is very specific to company. It means we are going to understand this with reference to the provisions available in Companies Act. Now just imagine a company is having a paid up capital of 100 million. It has a free reserves of 400 million. It means they have total equity of 500 million. And now this company wants to borrow some amount. Let's say they want to borrow, say somewhere like 1000 million. 1000 million. Whether the company can borrow it just like that, and whether these kind of things happens in the real life, yes, obviously, because so many financials, you will see the borrowing numbers are so big when compared with the equity, that is paid up capital plus free reserves. So it can happen in real world, but certain provisions have to be complied with. If those provisions are not complied with, then this kind of a scenario can become non-compliance. That is, they are not in compliance with the law. It can happen. When? See, if you notice section 180, subsection 1, clause C of Companies Act, it says companies cannot borrow amount beyond the aggregate of paid up capital and free reserves. It means this section says borrowings have to be within the aggregate of paid up capital plus free reserves. It means what? This company is borrowing where the paid up capital and free reserves is 500. This company's borrowing should also be within 500 only. But here the borrowings is 1000. So here what has happened? The borrowings has actually exceeded the sum of paid up capital plus free reserves. So in this case, whether this company is in non-compliance of section 180 subsection 1c, the answer can be yes if this company has not followed one procedure. Okay, so what is the procedure? See, whenever the company wants to borrow an amount exceeding the paid up capital and free reserves, that is sum of paid up capital and free reserves, what they have to do? They have to take permission. They have to take permission. Permission of whom? They have to take permission of shareholders in the general meeting, and this should be obtained by way of a resolution. So if a company is getting the permission of the shareholders in general meeting by way of resolution for borrowing an amount exceeding the aggregate of paid up capital and free reserves, then in those cases these kind of situations are valid. They are legal. And if this is not done, and if the company is borrowing like this, then it can become void. This can become invalid. It is against the law. It means it can become void ab initio. That is, right from the beginning, this is not valid. So what is the consequence? The consequence is the lender, whoever have given this money, they may not be able to claim that money. They may not be able to enforce it following the provisions of the law, because right from the beginning they have not followed any of the provisions of the law. Okay, so very important, if you are a banker, if you are going to give loan to a company, you have to ensure whether the company has power to borrow or not. It means if the borrowings are within the aggregate of paid up capital and free reserves, aggregate of paid up capital and free reserves, the company has implied power to borrow. But if it is going beyond that, exceeding that, then that company should have taken the permission from the shareholders in general meeting, and they should have a resolution in place for that. Only then we can say the company has power to borrow. And this situation have to be monitored, because what will happen is companies will go and take the permission for a certain amount, and over a period of time this amount will be crossed, and some companies will try to get it ratified later. But Companies Act says no question of ratification, resolution is required. Okay, so if the borrowing is exceeding beyond this limit, then what the company should do? Once again, they have to get the permission from the shareholders in general meeting by way of a resolution. So that is very important. The focus of the discussion is borrowing, because we are trying to understand whether the company has power to borrow. So what do we mean by borrowing? Borrowing means amount availed with a promise to repay. Okay, let it be with interest or without interest. But in that, there are certain exclusions. That is, temporary loans, they are excluded. They are excluded from borrowing. It means the loans that are availed and promised to be repayable on demand, the loans that are availed in the form of overdraft, cash credit, or the loans that are going to be repaid within 3 to 6 months time period, they're all temporary loans. They won't come under borrowings. It means if a company is borrowing in these forms, then these provisions are not attracted. And we also mentioned about paid up capital and free reserves. So what do we mean by free reserves? These are all the reserves which are not set aside for any specific purpose. It means they are not in the forms like debenture redemption reserve. They are not in the forms like capital reserve. So these are all general reserves. They are all general reserves. They don't have any specific attachment, or they are not created for any purposes. So let's conclude with certain precaution notes which bankers have to take whenever they are lending to company, and the points they have to focus. So they have to see whether the borrowings are exceeding the aggregate of paid up capital plus free reserves. In that case, they have to ensure the resolution in place. The resolution is basically permission given by the shareholders in general meeting, allowing the company to borrow up to a certain limit. Number two, if bank is giving credit to weak companies. So at the time of giving the loan, probably resolution will be in place. Resolution for borrowing exceeding the paid up capital and free reserves up to a certain limit. Okay. But the problem with weak companies is their borrowing position will get affected because of various factors, and it is possible that their accounts can become overdue. So there will be non-payment of interest, there will be non-payment of principal, and as the result, the borrowed amount will increase at a faster pace than the originally envisaged level. So in those cases, it is possible that whatever resolution they have in place will get outdated very easily, because the borrowings will increase at a faster pace because of the non-payment of these amounts. So again, a fresh resolution have to be obtained. Okay, so these are all some small things you have to take care of when you are dealing with companies and when you are focusing on companies' power to borrow.